Ind AS 20, accounting for government grant and disclosure of government assistance. What do you mean by government grant? Government grant is an assistance in the form of transfer of resources to an entity in return for past or future compliance with certain conditions. Exclusion from accounting of government grant, for which Ind AS 20 is not applicable. Government assistance provided in the form of benefits such as income tax holidays, investment tax credits, accelerated depreciations. For this, Ind AS 20 is not applicable. Government participation in the ownership of the entity, government grants that will be covered by Ind AS 41, agriculture, government grant which cannot be reliably measured, transactions with government that cannot be distinguished from the normal trading transactions of the entity. The significance of the benefit in the above example may be such that disclosure of the nature, extent, and duration of the assistance is necessary in order that the financial statements may not be misleading. So, for above categories, Ind AS 20 is not applicable. They are excluded from accounting of government grant. Next, recognition of government grant. Government grant should be recognized only when there is a reasonable assurance that entity will comply with the conditions attached to the grant and grant will be received. How to account for government grant? Accounting for government grant. First, non-monetary government grant. That means grant received in kind. There are two options for recognizing non-monetary government grant. That is grant received in kind. Option number one, recognize the government grant as deferred income and recognize the asset both at fair values. Government grant will be transferred to P&L over the period, matching with depreciation expense on those assets. Option number two, recognize the government grant and asset at nominal value. For example, 1 rupee or 100 rupees, etc. Next, monetary government grant. That means government grant received in cash. First, government grant related to asset. Asset is of two types, depreciable asset, non-depreciable asset. In case of depreciable asset, there are two ways. First option, recognize the government grant as deferred income and transfer to P&L over the periods matching with the depreciation expense on those assets. Option number two, deduct the grant from the cost of the asset. Next, in case of non-depreciable asset, there are two options. First option, deduct the grant from cost of asset. Option number two, recognize the government grant as a deferred income. And if grant is conditional, recognize government grant as deferred income and transfer to P&L over the period that bear the cost of meeting the obligation. If grant is unconditional, recognize full government grant in P&L on day one. Next, if government grant is related to revenue, if grant is received for past expenses incurred or for immediate financial support with no further cost, recognize government grant in P&L immediately when the grant becomes receivable. If grant is received for current or future expenses, recognize the government grant in P&L in which related expenses are recognized. Next, government grant recognized in P&L may either be shown under the heading other income or alternatively it may be deducted from related expenses. Next, a refund of government grant. A refund should be first written off against unamortized deferred credit balance available. The excess should be transferred to P&L immediately. If on the receipt of the grant, it was deducted from carrying amount of the asset, then refund of the government grant will be recognized by increasing the carrying amount of the asset. The cumulative additional depreciation that would have been recognized in P&L to date in the absence of grant shall be recognized immediately in P&L. Next, loan at less than market rate of interest. The benefit of a government loan at a below market rate of interest is treated as a government grant. In this case, loan is measured at fair value and recognized as per Ind AS 109. The benefit of below market rate, that is difference between initial carrying amount, that is fair value as per Ind AS 109, and proceeds received is to be treated as government grant. Such government grant is transferred to deferred income and recognized in P&L on a systematic basis over the periods in which the entity recognized the related expenses for which the benefit of loan, that is grant, is intended to compensate.